Hey, good morning, fellow crypto traders. I am back. Got my hand slapped yesterday. That's why you didn't see a video. TradingView banned me for one day because in the description I typed out, it wasn't anything I said. I typed out see more on Substack. The funny part is I was actually trying to avoid breaking house rules by not putting links in my description, my typed out description. So I said, I don't want to break house rules. So please see me at Substack, which I can put in my signature. That's fine according to house rules, but apparently not in the description. I didn't even put a link in the description. I just said, see me at Substack. Well, that got me banned for a day. So I have to really be careful with this social media stuff. I can't say the wrong thing on YouTube. I can't say the wrong thing on Twitter. Everything I seem to do or say on TradingView goes against house rules. Um, Thankfully, they haven't monitored the videos yet, so I can say things on the videos that I can't type out in the description. I'm okay. Anyways, let's get on. We've got lots of price action here on Bitcoin, right? Kind of a bloody couple days. And I know you all are chomping at the bit to find out why I am ignoring this glaring head and shoulders pattern on the Bitcoin. All right. And I want to explain today why I don't think this is going to play out. And so that's what this video is about. And we'll talk about future price action, where I think we go from here, etc., as usual. Let's get started. All right, so first of all, this definitely is a head and shoulders pattern. And 85% of the time, we've said this before, 85% of the time, these head and shoulders patterns play out. So why in tarnation am I disrespecting the probability that this will play out and going with the 15% chance that it won't, especially when everybody is so doggone bearish? All right, we're at 15 here on the Fear Greed Index today. Everybody is scared to death. Stablecoin holdings are going higher, which means everybody is offsetting risk and going to stablecoins. Head and shoulders patterns play out 85% of the time, and we have broken the neckline. So all those things should tell me. Additionally, one more thing here, guys. See this purple line? That's my measurement. All right, from the top of the head to the neckline. Where does it go? It goes straight to $20,000, $20,000. We never came back and kissed that. Let's zoom out here and show you what I'm talking about. When we broke through $20,000 earlier last year, that was right. Yep. We never came back and did the thing that I say we like to do, kiss mama goodbye. We never did that. So I totally get why professional analysts are saying, well, we need to go back and visit 20,000. We haven't done that yet. I totally get that. Additionally, when you have a head and shoulders pattern like this, we've broken the neckline. I could be very wrong. I mean, we could be going to 20,000. It is possible. I won't rule it out, especially when you have a high degree of probability pattern on the chart that I am obviously blatantly ignoring. All right. So those two things are arguments for going to 20,000. All right. So take it as, don't just listen to what I say, but take those factors into account as well. We could go to $20,000. All right. That is true. Now here's why. I'm going to delete this. Here's why I don't think we will. All right. First of all, we still have bullish divergence. See the black line here on the RSI? It is trending up. That is obviously a trend upwards. It's not a huge trend upwards, but it is a trend upwards. And this black line indicates the trend of our price. And where is that going? It's going straight down. Almost, not really. I mean, we're at a big slant, and we are dropping down fast. All right, so that hidden bullish divergence is something I always take note of. It's a significant indicator. The other thing that I see here, and I didn't note it up on my notes, but we broke out to the upside of this downtrending red line. What do I say we like to do? We like to come back and kiss mama, right? We did not quite get there. All right, let me zoom in real quick. We did not quite get there on the 29th of December. Instead, what happened is the green trend line played interference. All right. So we sat there for support and used that support for about 4 or 5 days before we broke down. And that's where I had called a bottom, right? So I wasn't exactly correct. We had more bearish action behind the scenes, ready to take us a little bit lower. And so we are definitely have broken the neckline and have gone lower. But now look what's happened. I'm going to zoom in again. I'm going to circle this so you can see it. We just kissed the top of the trend line. See that there? We kissed the top of that trend line. And where does that coincide? Perfectly with this blue uptrend line. I mean, precisely. And whenever you have two major trend lines intersecting and you kind of hit the V in the middle, that is huge. That tells me that I believe, anyways, that this is where we're gonna stop going further down. All right, right here in this area. What is that price? 42,000. That tells me we are going to slow our bearish sentiment greatly and potentially trend upwards again. Now, where does this blue trend line come from anyways? All right, it comes all the way from back in December, October actually, of 2020. That's where I started this. And you can see we hit it here in June of 21. Once again, we tried to break below it in July of 21, couldn't do it with a confirmation. And here we are hitting it precisely again, using it as support. All right, I wasn't quite sure we would get down to this blue trend line, but here we are. And so this is significant support and where I think we will end up. Now, I know you heard me say that before up here, I realize, and I was wrong about that. All right, can't call the bottom exactly all the time, can't call the top exactly all the time. Let's discuss some of these other reasons. All right, a weak right shoulder. What do I mean by that? Look how small this right shoulder is. Now, I don't know the answer to this, guys. And those of you who are pattern guys and know these probabilities maybe more than I do, help me out. Here's my question. When you have a weak right shoulder, dilapidated right shoulder like we do here on this chart, does that decrease the probability, the scenario of the head and shoulders playing out? So on average, head and shoulders patterns play out 85% of the time. What I'm curious about is if you have that weak right shoulder, does that lessen that probability? Does that lessen the chance of the head and shoulders pattern playing out? And if so, how much or why? Or what do you look for in that right shoulder? That's kind of what I'm interested in. And if you have any links or understanding data, could you please share that in the comments with all of us so that all of us can learn together? I'm curious about that. But I mark that, nevertheless, not knowing as one of the reasons why potentially this head and shoulders pattern will not play out. All right. Third thing I have up here is liquidity pools. Now I want to take a look at something here. I pulled from Glassnode and I like this stat. One of my favorite stats is looking at liquidity pools within the exchanges. So whenever you're in red, that indicates lots of liquidity on the exchanges. People are not buying and selling the Bitcoin. All right. So when people are not buying and selling the Bitcoin, what happens to the price? It goes down, right? There's no demand for the Bitcoin. All right. So when the liquidity is in green, that means there's actually low supply. Liquidity is drying up. All right. So there's low supply in demand. And what does that do to the price? It drives it up, right? All right. So, and you can see what happens to price action when you have liquidity drying up, and what happens to price action in general when you have a large amount of liquidity. All right. It just drives the price down and it drives the price up depending upon the liquidity. So over here is where we're at. All right. I don't think I can circle this because then the candles will shine through. Oh, no, okay. All right, right here is what I'm looking at. Liquidity continues to trend upwards. Illiquidity, I should say. Liquidity is drying up, so this is illiquid supply. And this was taken through the end of last year and is still continuing to dry up. What that means is the demand for Bitcoin is going to increase along with the lack of supply, right, on the exchanges. Uh, where is the demand going to come from? It's going to come from all the smart money, because who is actually selling this right now? It's all the retailers, all right? It's not the whales, it's not the hodlers, it's especially the traders that have gotten into this market in the last 2 years and don't really know what they're doing. Those are the people that are selling their Bitcoin here. I promise you that. In fact, let's take a look. Who just bought Bitcoin? Um, Let me shrink this down. All right, so that's your liquid supply versus illiquid supply. Liquidity is drying up, means demand is going to come eventually. It's going to follow. All right, and here's what I mean by who is buying up. So this was December 30th. Michael Saylor posted, MicroStrategy has just purchased an additional 1,914 Bitcoins for 94 million. And so not only does MicroStrategy own a majority, and actually I found a kind of a cool website here that tracks the Bitcoin holders, but it is not up to date because now MicroStrategy holds exactly 1,914 more Bitcoins than this number represents. And look at Michael Saylor should be up here a little. Oh, no, that's right. Michael Saylor owns 17,732 himself, and he runs MicroStrategy, of course. This is kind of an interesting chart to look at. Somebody put this out on Airtable. I can share the link. I don't know what to do. I don't think I can share the link in the description. And I can't tell you in the description to come to Substack. I can say it on here, apparently. You guys know what to do. As free subscribers, you will always get more data over there than on these videos, wherever you're watching them. Anyways, that just kind of confirms my point that the big guys are buying all your Bitcoin. You guys, not you guys, but retailers and noobs and people who have just entered the market, traders who have just entered the market, they're selling, and these guys are the ones buying. All right. So that tells me again that we are definitely nearing a bottom here. I don't see us going down to 20,000, guys. Again, I've said this before. I could be very wrong about my analysis here. Moving on, hedge funds. All right. I still think they're on vacation. I think hedge funds started taking vacation beginning to mid-December. Everybody stepped away from their desks, walked away, and they're really not going to come back and start trading or reallocating their portfolios again until next week. Maybe not till the week after. I don't know. January 10th seems like a date to me that people would be willing to come back and dig in, roll up their sleeves, and get to work again. So I put January 10th because I think that's what aligns with the data that I'm seeing on my charts. You know, you guys know I post the Jasmine chart a lot. as well. And so even just from the altcoin charts, we have these triangles that we can remain inside of. In fact, I see a triangle right here. See this purple trend line coming down? I just spotted this as I'm talking. With intersecting with the blue, where does that go? It goes through mid-January. We could be inside this triangle. And I've seen lots of triangles that give us kind of that time frame, all right, to mid-January. And I believe that correlates. Remember, I said you can read the headlines, you can read the news, you can know what's happening uh, before you see the headlines. And so I think that correlates with these hedge fund managers stepping back into the office, starting to get to work and reallocate their portfolios. And I think that's when we start to see bullish action come back because we have no liquidity right now. And when these guys start buying, I'm telling you, the price is going up. It's not going down to 20,000. I really don't have a hard time believing that. You guys know this. Um, this is what I'm seeing. This is what I'm understanding. All right. The only variable, I guess, I would throw into the mix here is I don't like the fact that governments are in the mix here as top holders. All right, let me escape so you can see. I don't like that. That is a risk variable to me. And maybe it's just because I don't trust governments. Maybe it's my suspicious attitude. Some of you are much more trusting of your loving governments than I am. I don't like that. They could influence the price somehow for whatever their own political gains might be, financial gains, etc., etc. You know the deal with governments. All right, and then, all right, number 5. Many of the altcoins have already suffered an 80% pullback. This is true. So there's not much lower, in my opinion, that they can go. I mean, we can see some alts draw back 90%, certainly, especially in the beginning stages, the smaller cap cryptos, which is what we trade. Substack subscribers, we trade the cryptos. A lot of times they are lower cap because I like the volatility. I love trading that. That's where you really make money if you know what you're doing. But anyways, we have seen 50 to 80% pullback on many of the cryptos. They could go 90. Yes, that's very, very true. But there's not much room. I mean, to lose 50% from where we're at in the altcoin space is really mind-blowing. Hard to believe. I don't think it's going to happen. All right, and then Bitcoin dominance. Bitcoin dominance is doing exactly what I said. Came below this support. It's trending back up again. I don't know that it's going to break that resistance now. I mean, it could be that Bitcoin dominance traverses along the underside of this for a little while. It kind of goes sideways. So not much happens with Bitcoin till end of January, mid-February. But meanwhile, that can be good for altcoins. People can be taking advantage of the prices right now because there's a basement discount right now on all the altcoins. All right, and we have seen altcoins rotate in their pump. One will pump, and then nothing happens with the rest of them. Then another one will pump the next day. And it's just a matter of looking at the charts and picking out the right ones. And so far, we've done a good job at that. All right. All right. Where am I at here? Go back to Bitcoin. All right. We got a few more seconds left. Let me talk about the last reason. Everybody thinks we're going to crash in January and February. Not everybody. But the newer investors, the last 2 years, they look at the history, they say, well, Bitcoin crashed, back after we had that big pump in 2017 and 18, and then we had a crash. And this generally tends to happen in January and February. We'll pull back and we crash. So I'm seeing lots of analysts say we're going to crash because everybody thinks we're going to do it. I think Bitcoin's going to do the opposite. All right, guys, that's my reasoning. Take care, and we'll talk to you in the next video.